Welcome back to Market Day Report. I'm Scott Shelty, otherwise known as the Cow Guy. Thank you for joining us, if you're just joining us, and then thanks for staying with us. It's worth staying with us all day. We've got to lots to go through. The markets have been all over the place for the last week. It started last Friday, if you remember that Friday after Thanksgiving. Let's take a look at how things are standing right now. Let's take a look at that corn board. Let's take a look at see how corn is doing. It's kind of holding in there, 7 3/4 cents higher in that March contract at 584.5. About 2 cents off the highs. May is up 7 1/4 cents at 586.5. And then that's a little bit, 2 cents off the highs there-ish, kabibble. But we'll say that that's a good, decent board. Here's a really good board. March up 18 3/4 cents in the soybean market. 12.68 3/4 last. But look at Jan. Jan's up 19 3/4 cents at 12.64 even. That's still 6 cents off the high. So we were up almost 27 cents or 26 cents at one point today. So that's a good board. Again, we'll take both of those going home. But this is where things start to go a little bit wobbly, as they would say in England. March wheat in Chicago off 13 3/4 cents at 801 1/4. The good news is we're about 5 cents off the lows. We were plumbing the depths earlier today. Let's see what May wheat's doing. It's down 12 3/4 cents in Chicago at 806 3/4. Again, about 3 or 4 cents off the lows there. So we've bounced a tad. How about hard red wheat in Kansas City? 17 cents lower in March, 825 1/4. We're about 4 cents off the lows. I guess that's what we would say is the good part about that. May off 16 cents at 825 3/4. Spring wheat, I don't expect is going to be much different, and it's not. March off 16 3/4 cents at 1025 1/2. May off 16 cents at 1011 3/4. But we can finish up here with the cotton before we bring in our next guest. And look at this. March is up 58 cents or 58 points, whatever you want to say, at 104.28 in that March contract. Again, look at that D. So it was up over 120. Man, we've had one heck of a week. All right, let's bring him back. Todd Horowitz from, I think you're in Chicago, Todd. It's Bubba Trading. No, he's not. I can tell by all of that really expensive artwork.
A rodeo, baby.
Look at that. Yeah, he's right. Look at all that expensive artwork. That's intimidating, I tell you. And I bet if we panned around, there'd be a few Rodin statues as well. All right, let's get down to business here. What do you think about the grains here, Todd? It doesn't look too bad, except for that wheat market.
Well, I knew I should wear my pink and gray tie today, but I think that, they look okay. I mean, soybeans, 1250 is the number, right? We've been watching that. When we were below it, we were more bearish. Now it's starting to look positive again. Wheat's got to hold $8. I mean, wheat's a little bit negative. It was the first one to run up, and it's coming off a little bit. And corn looks solid, and it's just been plodding along and looks great. So I think the overall picture is pretty good. And again, I'm a big fan of the space. I mean, I've got some things that are still negative. I'm still, full disclosure, I'm still short beans at the moment. But of course, if we close above here, I'll reverse that position out. But I think that overall, looking into the first quarter, I think we'll be in pretty good shape. It's going to have to keep up with the inflation and everything else. So I think.
Well, we had an average hourly earnings number today that looked like earnings were not as hot as they thought they were going to be. They're still higher, but not as high as they thought. But then I don't want to spoil it, but let's talk about Nonfarm in the next segment, because I don't know about you, Todd, but I don't feel like the economy's firing on all cylinders like everybody else is trying to tell me.
Scott, I don't. And to me, it's a weak economy, weak jobs, weak administration, and a weak president. I just don't think that there's anything that is going on here that makes any sense. And again, this inflation, the wages are probably a third of what the inflation is, the wage increase, because the true inflation numbers are much higher than they quote. And I think that's a really big problem that nobody's addressing, and it's going to have to be addressed. And of course, the best way to address it would be to open up the fracking and shale, but they're going to do it with interest rates, which is even worse, because that will cause some pretty heavy meltdowns, I would suspect.
I'm worried about that, too. All right, thanks, Todd. Stay right there. We're going to go away, pay some bills, come back, and we're going to talk livestock with Todd Bubba Horowitz after these messages. Welcome back to Market Day Report. I'm Scott Shelty, otherwise known as the Cow Guy. I wear the black and white. I've worn this in the trading pits before. In Chicago, I've worn it around the world, actually. But we're up the black and white to make sure that we keep that brand going. Let's keep the cattle market going. The Cow Guy wants to talk about live cattle. Let's move into that live cattle board and see what's happening. If we see about any strength that we had there or weakness, we've had a little bit of weakness. 37 cents lower in Feb at 139.20. We've got April off 32 cents at 142.27. But I can tell you right now, there's not a ton happening just by the change of day in that market there. How about feeders? We do have a stronger corn board. So that's going to weigh on feeders. Everybody knows that. Jan's off $1.40 at 164.37. March off $1.05 at 167.27. And then lastly, let's take a look at lean hogs. Livestock today are kind of sucking a little wind. I wouldn't say it's too bad. It's a little bit of a consolidation trade today. Quiet market, not a lot of volume. Feb, lean hogs off 45 cents at 81.55, while April's off 50 cents at 85.82. Let's bring back in Todd Horowitz from Bubba Trading. Todd's in Las Vegas, and he's doing the show from an art studio. Todd, what about putting people back to work in this country? It really wasn't the number we thought we were going to get this morning.
Well, we only missed by 340,000, but the actual number went down. You know, Scott, it's a problem. You and I have gone over this time and time again. 9 million people needed jobs, 11 million job openings, and yet we can't fill them. We can't marry the two together. You know, there's too much stimulus. There's too much free money, or, you know, that's not really free. It's we're paying for it. But there's too many perks for people not to work. And that, of course, to me, is the drive for UBI. And that's why we're not going back to turning on the wells. That's what I see.
And so explain UBI real quick for the folks out there that don't know what that means.
Universal basic income. This is a plan that this administration would like to get in place, which is giving each family a stipend of X amount of dollars per month that would be supposedly financed by the government, but it's really financed by the middle class. Well,
I mean, we're going to leave it at that, but I'd say this, you know, that's for our viewers and listeners, folks that really do the hard work every day. That's a pretty foreign concept. All right, thank you very much. That's Todd Horowitz from Bubba Trading in Las Vegas. Let's bring it back to Nashville so I can throw it back over to Janet.